Hello and welcome. We're right on time here at 2 p.m. Good afternoon. We hope you are well, and thank you for joining us today for this webinar with Galleon Gold Corp. My name is Jacob Willoughby, and I'm a Vice President of Research and an Analyst at Red Cloud Securities Incorporated. Joining me remotely, of course, is David Russell, President, CEO, and Chairman of Galleon Gold. We'll begin today's webinar with a presentation from David, followed by a question and answer period. As a reminder, you can type in your questions at any time, and we'll try to get through as many of them as we can during the time allotted. But before we begin, I'll go over the disclosures for the webinar. For Galleon Gold, there may be some forward-looking statements made on this webinar, and I would direct listeners to the cautionary note on page 2 of the company's corporate presentation, located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. Also, we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research on Galleon Gold, of which there isn't any at this present time, but will be eventually at redcloudsecurities.com by clicking on our research portal at the top of the front page. Red Cloud specific disclosures regarding Galleon Gold are as follows. In the last 12 months, Red Cloud Securities has been retained under a service or advisory agreement by the issuer. Additionally, Red Cloud Securities is currently working on a private placement financing for Galleon Gold under a best efforts finder's fee agreement. And now I'm happy to introduce you to David Russell, President, CEO, and Chairman of Galleon Gold.
Thank you, Jacob. Pleasure to be here today. What I'd like to do is just introduce myself, and we can start with the Galleon Gold presentation. And Jacob actually went through all the disclaimers, and he did a much better job than even the disclaimer there. But first of all, let's date it back to 1978-79. I finished college as a mining engineer out of Montana, University of Montana, Montana Tech. I started working with the ASARCO, American Smelting Refining Company, and learned quite a bit about the base metals, the precious metals, copper, and the smelting business also. I went on in Meridian Gold, this would have been in 1988-90 range, to build the Meridian Gold Company. We had several projects, the Royal Mountain King, the Lincoln Project in California. I mean, glittery California, definitely was gold there. Now, Hecla Mining Company, I did some on the Gold Hunter project that's associated with the Lucky Friday mine, Independence Mining at Jarrett Canyon, which is now owned by Eric Sprott himself, Sprott Mining. And then on to Lac Minerals. That was quite interesting between 92 and 94, the Bullfrog mine and some of the projects in the US and Canada. We went through a hostile takeover started by Royal Oak and finished by Barrick Gold. And I stayed with Barrick Gold for about 6 months. The original president, Bob Smith, I worked with him. And then we went on to First Mississippi Gold, and we evolved that into Getchell Gold. Now, that was a very, very large project, roughly about 200,000 ounces a day, 3,000 tons a day of production from 94 to 99. But the key was we found about 16 million ounces of gold there. Placer Dome wanted it worse than we did. We did a merger with Placer Dome and finished that in early 1999. And then after that, I started a new company called Navarro Gold Private. We took it public as Apollo Gold, and we had the Florida Canyon Heap Leach Mine, Montana Tunnels, and I took on the Glimmer Project, which was Black Fox in Timmins, Ontario. And that's really where we're going today, is back to Timmins, Ontario. I really like the district up there. I kept my eye on a lot of different projects over the years. Now, the Black Fox mine started in production about 2008. It was originally the Glimmer Mine exploration deposit, but McEwen Mining's got it 3 companies later in mergers and that sort of thing, and still a 70 to 75,000 ounce producer per year. I know it goes up and down depending on what the production levels are, but it's a good mine. And one thing I'd like to do is state that in the finding of gold within the Timmins district, it's not easy. You've got to be on the main trend, and we are. And if we start on the page 3 here that I've got up on the screen, essentially we've got a new gold company. We took Pure Nickel. Pure Nickel was the shell company. I was actually the chairman of the Pure Nickel company for almost 12 years. And we said, let's turn this into a gold company. Nickel's down a bit. let's make hay when the sun shines with projects. And what I did is I approached Eric Sprott. He's an investor. Obviously, everybody I think that's keyed into the gold business knows who Eric is. Eric had a project, and it was called the Neal Project. And that Neal Project was a small underground gold project, southern Idaho, about 30 kilometers southeast of Boise, Idaho, almost in the foothills of the area. The mine had produced over 30,000 ounces of gold. And he said, geez, Dave, I need a partner. And I said, okay, Eric, I've got a gold company that's just under development called Pure Nickel, and we're going to change the name to Galleon Gold. The same time, I said, hey, Eric, I've got to go back to Timmins. I know of a couple projects up there. I need some backing. And Eric said, sure, why don't I vend in the Neal Project into your company, which we did. He did. And I issued him 15% of the company, and we were off and running. He funded me about 3 million Canadian dollars in a convertible to go out and source projects, of which the Explore Resources portfolio was on my list many years ago, probably in the mid-2000s, 2007, 8. I watched Tom Exploration and different companies go in and out of that, drilling the project. And I also looked at Lakeshore. Tony McCooch was in charge of it at the time, just to the east or southwest of the project. And I said, one day this is going to come back to us, that we will be able to get involved with this project. And we did. And we picked up the Explore Resources company in a merger, and that ended right at the end of December, early January of this year. And in the merger, it ended up being roughly about a 60-40 between Eric's stock and the Pure Nickel shareholders and Explore Resources. We ended up splitting about a 60-40 on a stock on a merger basis. But let's get back to why Galleon Gold. Well, Galleon Gold, number one, now has Explore Resources. They have the portfolio properties, roughly 12 of them. But the key is the high-grade nature potential of the West Cache project. The West Cache project has intercepts, we'll say anywhere from a couple meters of 4 or 5 grams up to almost 8 meters of 114 grams. It will make most likely a very good open pit and an underground, but undergrounds need to be developed properly, and it takes time to do that. So with that, we'll move on to the next slide and just talk about capital structure of the company. Okay, obviously we have a lot of shares outstanding, 256 million. And we have options outstanding of roughly about 20 million and warrants outstanding about 20 million also. So fully diluted, we're about 325 million shares. So that's a lot. But keep in mind, we're using a shell company called Pure Nickel, converted it to Galleon Gold. Now, eventually, maybe you'll have a reverse split on the stock, but not right now. You need something to drive that forward. And what this story really is about is redeveloping the Explore property up in Timmins, Ontario, which we call West Cache. This West Cache needs to be drilled, it needs to be developed, it needs a PEA, and it needs a lot of different infrastructure work done to bring it online as a full mine. I think we're looking at a time frame of roughly about 3 years to do this. So it doesn't happen overnight. So again, Eric Sprott is one of our backing partners. He's a partner in our Neal Project. He's still got 20% of that. And within the stock, he's got 27.6%. Again, Eric is not new to the business. He picks on people that can actually handle mine projects, and he picks on high grade. And that's what we have. Okay, next slide. Directors. Okay, we've got a good base for directors here. Obviously, there's myself on the board. Chris DuPont came from the Explorer side. He was the former CEO. He's a good engineer, and he was actually, I didn't really get to directly know him, but I saw a lot of his work on the Glimmer property that became Black Fox many years ago. He was actually the chief mining engineer that developed that property and actually flushed out that it had gold in it. You could make money there. So my hat's off to him that I saw his work many years ago. And then I watched in Tom Mining and then in Explore Resources why he developed other projects. He did very well. Then we got Mario Calantonio. He's an engineer out of Timmins, Ontario. He's a professional engineer. He brings a lot to our board. Thomas Kaufman. He's the original partner, M Partners. He was a director with us on Pure Nickel. He's a lot of help within the board, and he's our audit committee chair. Gerhard Merkel. I met him in February over in Munich, Germany. Great guy. He's more of an entrepreneurial CEO type of person that works in a trading platform, but he's backing some of our investors out of the Germany area. James T. O'Neill. James T. O'Neill is the interim CEO at Garrick Sprott's mine, Jarrett Canyon. and he's worked for him for at least a year or so now, but he's the interim CEO, but he's worked with me in companies like Asarco and Apollo Gold on the finance side before. And then Steve Vaughn, great mining attorney. I can't say enough about Steve. He's been on our boards at Apollo Gold, Pure Nickel, and now he's staying with us at our new company, Galleon Gold. Okay, on to the next slide, slide 6, North American portfolio. Well, we've got a lot of projects, but we're going to focus on one called West Cache Project. It's 3,550 hectares. That's a little over 8,000 acres for those that speak in acres, and it's only 13 kilometers due west of Timmins. It's right along the Highway 101, and there's a 43-101 on this project. 1,079,000 ounces in a global resource base, but it hasn't been updated since 2013. That's an opportunity for us to get in there, infill drill this project, and really flush out how big is this project going to be and what kind of money can you make off of it. But like I mentioned before, good intercepts. We have intercepts all the way up to 8 meters wide at 114 gram gold. That's high grade. That's what interests a lot of people, a lot of investors, especially people like Eric Sprott. Now, we say we've got a 20-hole program. It's probably going to end up to be a little shorter holes for 15,000 meters of drilling to actually get it through a PEA process. That's going to take us a bit of money to do that. I'll talk about that in a minute. Now, the Neal Project, we'll just touch on it. It's got some very high grade. It's got grades anywhere from, we'll say, 7, 8, 15 grams up to 33 grams. This was drilled off originally as an open pit, followed by the original underground. We're going to actually target another underground mine. Old timers are usually never wrong. If they believe it's an underground years ago, it was probably an underground. And that's what we believe it is. Now, we're not going to touch on the 12 early stage properties, but we do have 12 other properties between Quebec and Ontario. Now, the next slide, number 7. Okay. This project is in Timmins. It's in the heart of the camp. It's north of Sudbury, but if you get on an airplane, it's about an hour, 45-minute air flight from the Pearson Airport in Toronto. So it's easily to get up there to it. And then once you get off the airplane, it's about a 30, 35-minute ride from the airport to the mine site. Okay, the next slide. This slide kind of says it all. It's a little bit cartoonish, but if you're in the Timmins camp, you need to be on the Desert Porcupine fault structure. A lot of it has some porphyry units. It has shearing. It's got pyrite quartz shearing within it. But let's start on the right side of the picture, Black Fox. This is where we developed the Black Fox mine. I bought the Stock Mine and Mill, which is very close to the Aquarius mine from St. Andrews Goldfields years ago. And we rebuilt that mill from 800 to 2,200 metric tons a day. And our first year out of the chute, I think we were at 65,000 ounces of gold. So it was a great kickoff of a gold mine in 2008, 2009. And as you come down the trend, you see the Aquarius and the Taylor projects. They'll come into play with other portfolios, which are in Kirkland Lake currently. And then you go on to the Holler, Pamour, Hoyle Pond. You go into Hollinger, McIntyre mines, the Dome mines. Right between the Hollinger, McIntyre, and Dome, I think you can put a circle around there of a couple-mile radius. And there's been over 60 million ounces of gold poured in that area and sold over the years from about 1910 area. It didn't happen overnight. And the whole district is well over 100 million ounces of gold. And then you move on down the trend to the West Cache property. This is where it's 3,300 hectares. We've got a very large land package on this one. And then right next door to us is Lakeshore. Okay, they've got the projects there that Tony McCooch originally put in the underground mines and that sort of thing there. They're associated with Bell Creek, where the mill and the Bell Creek mine is on the east side of Timmins, and they truck the ore from Lakeshore over. It's a great place to be. You're right in the heart of the mining district here. So here's more of a detailed list. Okay, we can take a look at it. The first slide on the right up above, it shows where we're proposing a small an open pit. There'll be an underground mine there. But you see the red line as you come down. Now the red line, say as it comes down in this area here, that's Highway 101. We're only 13 kilometers from Timmins, and we're right off the highway. So the access is very good. And I mentioned the regional airport, and there's a great hospital there. It's a base of about 50,000 people there, and it's mainly mining. There's some logging, there's some mining, some outdoor sports and that sort of thing, like snowmobiling up there. But the key is, this is a mining camp. Gold Corp, which is now Newmont, They've got some of their main projects, open pit and underground mines there. And then you've got Lakeshore, which is Pan American Silver. Now, if everybody knows the history, it went from Lakeshore, then it went into Tahoe Resources, roundabout way, and then Pan American Silver bought Tahoe Resources out. And they're operating and doing successful up there. They're very successful mine and operating people. So now, where do we look? Okay, within the geological system, this is more for those geologists on the call or the mining people that would like to see, where we are. We're mainly on the south limb of the anticline syncline. Now, I don't believe anybody's been down to the bottom system down in where the axis is down in the bottom. That's very, very deep, wherever that is. We're up in the top, probably 800 meters, and that's the deepest holes are about 800 meters deep. There's roughly about 325 core holes that make up the resource base in this area. Now, the mineralization we have is very similar to the Hollinger and the McIntyre mine. From my understanding, right next door to us to the southwest on Lakeshore, they're finding a lot of the porphyry blocks there. And basically, it's a sheared up quartz feldspar porphyry. And within the fracturing of the shear zone, that's where the gold of the plumbing system is. And if you've got the right geology, you've got the fracture zone, you've got the porphyry, you've got the gold within that area. So I think we've got all the earmarks or all the pieces put together for what we need on the geology side. Now, what we started with is on page 11. Now, I kind of cringe when I look at this and I say July 2013. No, there hasn't been much done on this project since then. They just didn't have any money. And, frankly, they didn't have the drivers to push this one forward to actually get it through PEA process, which is a 43101 Canadian process to get a PEA that defines economics on this. What they did is a global resources, and I'll mention P&E Consulting, Eugene Pirich. He's got a great engineering group. They did the original model on it, but it was global. It wasn't detailed enough for really mine planning. So what you end up here with is roughly 1,079,000 ounces of gold. And if you look at the categories for the pit, 1.5 to 2 grams in a pit, that looks pretty good. The underground end of it, 2.3 to 2.7 grams, that doesn't look so good to me. Right next door to us at Lakeshore, from my understanding, they're mining between 2.5 and 3.5 grams underground. That's where we need to be or higher, which I think we can be with the drill data we had. What we did is when we decided on, let's take a look at merging and taking over the Explorer Resources company. We said, okay, Eugene, would you go back into this model and would you look at it from the perspective of, let's look at it as if we're going to mine it this time. I'm not asking for a PEA. And you tell me what we can mine and how we can mine this. You got one big pit there, but in actuality, is it a couple smaller pits of higher grade ore? What about the underground? What does it look like when we edit off the areas where there's no drill holes? And then show us where we need to drill to improve this model. So the next slide here, this is showing what they originally did. They're roughly about 750 meters in length. That would be east to west, north to south, about 570 meters. And there's 6 different shear structures within this, and there's gold in every one of them. So we said, okay, that's great. Why don't you do the model and then show us what the model really looks like after we got done. But we want you to focus in on the higher grade underground and tell us, what do we need to drill to bring this up to speed, even to a resource state deeper now? Now, on slide 13 here, when you look at it, you can see intercepts 11 meters of 5 grams, 5 meters of 8 grams, all the way down 15 meters, 8 grams, and then another 7.8 of 114 grams. That's an ore body. That's a high-grade underground mine. But there's not enough drilling down deep. When I mention deep, we're talking 4, 6, 800 meters. That's a long ways down there. These guys were able to drill and hit targets like this, but it's very difficult to drill off targets like that. That's what we've got to do, is we've got to drill off the pit first and then start with the 200-meter level, the 300-meter level, then the 4. And that's going to require not only drilling, but underground ramp system work, setting platforms and drilling probably on 25-meter centers first, and then down to 12.5-meter centers to actually go to a mine plan and a reserve base on this project. So once we had the model redone, we looked at it and said, okay, that makes sense now. So if you look at the picture on the left side of the screen here, you see these green lines. This is proposed drilling. What we did is we edited down that pit into 4 different small pieces of pits. Voila, the grade went from 2.5 grams up to 4 grams in this pit. Obviously, the strip ratio is going to be an issue here. But what it tells us is we have a pretty good shot if we infill drill and then we infill in between these holes later. We should bring that pit back together, but it shouldn't be a 2 to 2.5 gram pit. It should be a 3.5 to 4 gram pit. Same thing on the underground. Instead of having big zones, you've got more isolated ore chutes. That looks like more normal to me in the Timmins district, where you've got actual ore chutes you're following down. The little squiggly lines, these are proposed ramps. Now, keep in mind, there is no mine here yet. There has never been a mine. This whole area on top at one time was covered in glacial fill. Okay, and once they did the geophysics, wildcat drilling over the years, they were able to flush out, yep, the structures are there, the gold is there. Now it's more cleaner. We pulled off the drill holes on the slide on the right. This shows you where the ore is below the pit. And then you see a big blank spot. There's no drill holes down there. We've got to do a lot of drilling here as time goes on. So what do we have to do this? Well, number one, we've got an infill drill. We're saying 20 holes, but in reality, what we're probably going to end up with is about 35 or 40 holes. They'll be anywhere from, we'll say, 250 meters to 400 meters in length. We'll be infill drilling the pit to bring it up to a PEA standards. We'll be starting the permitting. The permitting will actually address pre-stripping one of the pits for a bulk sample, maybe 70 to 100,000 tons. And then an underground ramp system, put a platform in, and we'll be doing some test mining. But first, we're going to drill it off most likely 12.5 to 25 meter centers. And then we'll start putting things on the books as far as resources and reserves that can actually be mined economically. So that's phase one. It's about $3 million project. Phase two, we'll finish off the PEA, and we're targeting the end of October and November to get this PEA done. Now, the coronavirus has slowed us down with drilling, but in the next 3 weeks, we will have the local drillers out of Timmins starting the project for us. And we're bringing on two very seasoned exploration geologists to help us out, not only the drilling side, the modeling side, and the planning side on this project. So once we go into phase two, it'll be a $4.2 million program, and then phase three is 15 to 20 million. That's pre-stripping the pit, putting some underground ramp systems and some platforms that we can actually define this ore body correctly. So we're really starting from square one, but we have a good running start with this project being drilled with 325 core holes. In the model, there's 312 core holes, but we're still saying we need anywhere from probably 20 to 40 more core holes internally, depending on the length of those holes for both the open pit and the shallower underground. Like I said, we won't get to the deeper underground and those really high grade hits till later on. So that pretty much wraps up what I call the flagship mine. Again, West Cache, that is our flagship. 97% of all our money and focus will be on that project in Timmins. I think it's a winner. Now, the Neal Project, again, it's a vend-in from Eric Sprott. It's a very high-grade project, but it's an arrow. Is it a company maker? No. It's an interesting, small little project. Now, on the map, on this picture, this is slide 17, you see some of the claim work over here. A lot of this is private property. It's fully permitted. We're fully permitted for open pit mining, underground mining, shipping ore off the property. There is a mill down below. It's called the Golden Eagle. We've talked to those folks about, what about if we mine some high-grade gold? We don't have a mill yet. Can we use your mill? And they said, sure, make us an offer to do business. So anyway, the neighbors are nice. They've been mining there, the family, the Yonke family, for, I'm going to say, probably about 15 years on their gold mine here. And they mine 1/2 ounce to 1 ounce gold, or 15 to 30 gram gold. And it's free gold and gold pyrite electrum. Now, this is a picture. This shows you the gold grades. And you see 4 grams, 33 grams, 27, 21. These, bug your eyes out. But again, it's narrow veining. You're not going to have a 1 million ounce deposit. Maybe you'll have as much as 50,000 ounces on the books. Where at the West Cache project, we're going to end up having 1 million ounces plus, and we're going to make it a big project. This one will be a small one, but it was a start with us, and we helped Eric Sprott out with us. He helped us out. He helped finance us. And again, we started with Eric early in 2019. Took a while to get the vend-in completed and then get the merger by the end of 2019. Now, in the Neal Project, there is roughly about 11 holes that we put in reverse circ-wise. We spent about $170,000. To get the ramp system or anything else put into this mine depends on core drilling. So we're scheduling about $500,000 on core drilling on that end of it for 2020. Now, phase three depends all on the core drilling and what we see underneath the old workings. So the total budget we've got is $2.5 million for the infill drilling engineering. The PEA and permitting is about $500,000. So we're looking at about $3 million on our budget for 2020. And then on the Neal project, about $500,000. Then corporate overhead 1.5. So it's a modest budget, about $5 million. Like I said, that's pretty big for an upstart company. But we have great hopes by October, November to be able to turn out a PEA to the market, not on Neal, but on West Cache, to say to the market, here, we have an economic deposit. Is it going to be 1 million ounces? Is it going to be 700,000? We'll stay tuned. We'll let you know as time goes on, what kind of success we have with the infill drilling. I'll just touch quickly on Eastford Lake, Carnegie, Kidd Township, Golden Harker. We have a lot of projects. PG 101 is interesting. It's right next to Holt McDermott Holloway toward the Quebec border. That's an operating mine there. It's got 52 grams on 3 meters. That's pretty good. Should we take it on? Not right now. None of these we're not going to take on except the Ogden property. This is kind of to the southeast of us. That's part of West Cache. They've always kept that somewhat separate, but a lot of it's patented ground on that. It's a very big tract of land. It's not on the main Destor-Porcupine fault system. That's where we segregate it. But that's a geological play there. And then we've got East Bay, Destor, Nelligan, Chester, and then we've got our old Williams Lake, the nickel deposit there. These we'll take on with partners, or we'll just put them on the back burner until we're actually done with West Cache in the next 24 to 36 months and flush that one out. Now, where do we stack up with the other comparables in the companies? Okay, you see Galleon right down in here. What I expect is to move way to the left. So the meter's going to move to the left. I guess a good target would be, let's see if we can outshine Wallbridge. I like the Wallbridge guys, good management team, good engineers there. That's a pretty good target. Let's see if we can move to that direction with our project. And I think we can. We've got the land package to do it. We've got the structural trend up at West Cache to do that. Now, why invest into Galleon Gold? Well, we're brand new. We're in a great jurisdiction for mining in the Timmins camp. I've been there before. A lot of the people that are working with me within the company now, consultants and whatnot, they've worked on the project with me, and they built Black Fox with me. So we know the territory. We knew the structural trend. You got to be right on it. You've got to have the right land package, and you've got to have the right team of people to work with you. And we've got the high-grade hits to show that we can actually develop a mine here. Financial backing. It's very important to have financial backing from Eric Sprott. He knows his gold business. He's the gold guru. Obviously, he's done very well in his time. Kirkland Lake was one of his big ones that's done very, very well. Tony McCooch, I got to hand it to him. He's quite a CEO. He's very good. But anyway, we've got proven experience. We've got a good management team. We've got a good project for the market here. So please take a hard look at Galleon Gold. In the last slide, if you need to contact me, here are my contact numbers. Between that, I think we'll probably open it up for questions, I think shortly. So Jacob, I'll bring it back to you for the questions.
Great. Thank you, David. That was very thorough. We have a number of questions, and I'll start with the first one was in regards to the Redstone Mill. Someone wondering if that's something that the company would consider potentially looking to acquire.
Okay, the Redstone Mill, it's a fairly good haul. It'd probably be about a 70-kilometer haul. I did go to the Redstone Mill not too long ago. I think it was just before the PDAC, and I went through it, and the folks that own it were great. They gave me a great tour through it. It's very well built. It does have potential, you bet. Could it run the ore? Yes, it could. The only thing, the negative part is it's a longer haul. You've got to go out through East Timmins area, and then you got to turn off, and you got to go to the mill up, some back roads, but you got to go through, past some homes, and that might be a drawback. We have looked at other mills locally, but Redstone is, could be one. It's an opportunity, and we will need to custom mill ores probably about 18 to 30 months out before we actually do a final bankable feasibility study.
Right, that segues very nicely into another question regarding mills. One of our attendees wondering if there is capacity in the area for any local mills to test run your feed or potential bulk sample.
Yeah, that's a good question. We did talk to Lakeshore guys. Very hospitable, went to their site, and they said, yes, we've got mill. We don't have any capacity. We're at full capacity at 5,000 tons. But 18 to 24 months out, we may not be. We may need to infill, to keep our costs down. So they said, come back at the right time and let us know. We have looked at some other mills in the Kidd Creek area. And so, I'd say we've got 3 potential areas that we could custom mill ores.
Okay, great. There's another question regarding the resource. Now, there is a 43101 resource, which you touched on, but there was one of our attendees wondering if there was any historic resources.
Not really. The first real 43101 was done in July. It turned out in July or August of 2013. And prior to that, they modeled some ore resource base, but nothing that actually meant anything, I think, at the time. So the first one was done by P&E Consultants in 2013. So that's really our database that we're starting with. And I think it was done very well. But again, it was a global resource. It didn't focus in on mining resource. And that's where we went back, and we're not ready to turn out 43101, but I can tell you, we did our homework behind the scenes and said, okay, is it 1.1 million ounces, or what is it if you really turned it into a mining resource? What it did is it knocked it down to, I'll be honest with you, 750,000 ounces, which is still great. But what it then showed us is, where do you infill drill to bring the grade up and bring the resource back up toward 1 million ounces? So stay tuned. By October, November, we should have the answer in a PEA study and a new 43101.
Okay, that's great. Now, one of our attendees is asking about the private placement, which has been announced previously, but perhaps you could provide some details on that for our viewers.
Okay, first of all, I can't sell stock, and tell everybody where to buy the stock or participate, but Red Cloud is working with us on this, and we are doing an equity offering, and that's mainly capital to bring in to do the drilling and the PEA study on West Cache. The project is about $3.5 million on that one, $5 million budget for the year. We've told the market we'd like to raise 3 right now. Maybe we'll do a couple tranches here over time to get up to 5 million for our budget for the year. But that's open, and what I can say is contact me, or I'll have them directly contact Red Cloud on the offering.
Right, and you included your contact information at the end of the presentation. I'm assuming that's also on the.
That's correct. And this presentation is available. There may be some redacted portions of it, most of them on our website, and that's galliongold.com. Right.
And the placement would be a combination of flow-through and hard dollar financing?
Yeah, that's correct. The project's an exploration, and it fits very well with flow-through. We will take flow-through at this stage, and we like hard dollars because any of the corporate management or anything we do on the Neal Project does not comply with flow-through financing. You can't use it for that. But if we use it directly on drilling, engineering, feasibility work, that's flow-through eligible. Yes. So we'll do a combination. Yes.
Okay. There's another question. Good question, actually. Curious about what the amount of spending has been thus far historically over time up until today at West Cache.
That is a really good question. Okay, this would have been, we'll go back in the Tom Exploration days, the Explore Resources days, and the figure's right at $48 million. And that sounds like, oh my gosh, that's a lot of money. Sure it is. Break it down to, if you got 1 million ounces of gold and you spent $48 million, you spent $4.80 an ounce. That is really cheap. That is cheap ounces found. In the norm, it's anywhere from, we'll say, $8, $9 up to $15 an ounce. And then when you want to turn it into a reserve, you're going to be pushing $20 to $30 an ounce to get it to a reserve stage. So we're way up the curve right now, having over 1 million ounces of resource. Obviously, we'll bring it down, then we'll bring it back up in the feasibility studies.
Right. Okay. Another good question here, but a little bit further down the road, wondering about metallurgy. Specifically, would the West Cache potential ore be amenable to gravity pre-concentration, or can it be processed with cyanide leaching? What's the sulfide content in the rocks? Have you got much of that information at your fingertips?
I have. I'll just talk generally about it. The gold occurs as free gold and pyrite gold electrum. And right now, if you crush it and grind it, pre-concentrate it and pull some free gold out, and then regrind and then go to cyanide leaching, you're going to get 94 to 96% recovery of the gold, which is very good. I mean, that's normal for the Timmins camp. It's not silicon encapsulation. There's no refractory ore. There's no arsenic in it or anything like that. It's a very clean ore, very similar to any of the mines within the local district. Now, will it pre-concentrate up to where you can have free gold and just make a pyrite gold con and then sell that? Sure, you can. You're going to lose recovery on that. What you'd want to do is turn it into doré gold, 94, 96% recovery right on site or with a custom mill. That's my opinion on that. Now, are there other techniques for recovering gold? I think there are, but those studies have not been done. I'm the old school. I'll stick with what's, instead of reinventing the wheel, let's stick with what works and what we know works right now. And it's crush grind, pull the free gold out. You can pour a doré with that and then regrind and then go to cyanide leaching and bring your recovery to 94, 96% of gold.
Great. I think that covers just about all the questions we had. Unless there was any other point you wanted to touch on that didn't come up.
One point that I didn't really cover is we showed 970 meters. There's been holes out to about 2,000 meters showing gold, and we have roughly about a 4-kilometer package of the structure to look at. So what I can say is not only where we're drilling, where we're going to do the PEA, we've got an open blue sky case here, both on strike and down dip on this structure. So, is it more than 1 million ounces of gold? I'd be really disappointed if it wasn't, but I'm pretty sure it's going to be. So you can't guarantee anything till we get to that point, showing economics on the project. But I think there's going to be a lot of gold within the system, and we've got the land package to work with here.
Excellent. Well, I'd like to thank you very much, David, for taking time to educate us all about the company. As you mentioned, it's very new. It's not very well known at all among investors, which is one of the exciting opportunities. I'd also like to thank our audience participation and especially for the questions, the very good questions. And I'll just let you know that Red Cloud's next webinar is on Thursday. That's May the 7th at 2 p.m. And that will be with Quebec Precious Metals, and it will include the President and CEO, Normand Champigny, and we look forward to seeing you then. Until then, everybody stay safe, and thank you for participating.
Okay. Thank you for the audience for participation.